All right, what's up guys? It's Matt. In this segment, we are going to be going in depth into this trade that I took. And enough with the long intros, we're just going to jump right into the price action here. So this setup was a 1 to 3 risk to reward. I got roughly 40 or so ticks when it comes to this. So this was on the Euro futures chart, which is one of my favorite to trade, where I probably take the most amount of trades. As you can see, I have taken 3 trades so far on this earlier today. So the first 2 were break even. I was in and out just because the momentum really wasn't there. It was kind of choppy if I have the right bias, but I'm trying to narrow down a good risk to reward or a good entry, especially if we drop down to the 5-minute here. It might take a break even or 2 before it works out. But this is why persistence is important in trading, especially when it comes to entries, right? Sometimes you will have the right bias, but the momentum isn't there. And so you just have to be patient when it comes to that. All right. So why did I take this setup? Well, if we go back really quickly, let's go on to the 1 hour. This doesn't seem like a big trade setup, but I mean, 30, 40 ticks, that's more than enough for a lot of people, especially if you have a good risk to reward ratio. And so here on the 1 hour chart, if I zoom out, what really led me into taking this trade was this imbalance right over here to the left, or maybe I should say left over here. But anyways, you can use the fixed volume profile tool. So it's essentially like the regular volume profile, except you attach it to a certain price. So this is what it looked like for me. Obviously beforehand, we didn't see this section over here. So I'm just going to mark it out. And that way you can get a better understanding of, okay, what did the chart initially look like? And so taking the volume profile and connecting it here to this low down over here from a couple of hours prior, right? If we connect to there all the way up to this high, and if I go into the settings and we deselect extend right, you can see what it looked like initially, right? So initially where I have this green zone, this area was not even marked out on the charts. We can see there was a significant gap in the volume, and so there is our order flow and imbalance, right? So that's where I extended to this imbalance here. And then now if we get rid of this hidden box over here, we can see that this is what it looks like right now. So now the volume increased in that level, but originally, if I undo it, we can see that the volume decreased. So that imbalance is what led me to believe off of the higher time frame that, okay, if we're starting from the top and we're doing a top-down analysis, we went on the 1 hour and we saw that volume profile. Now, when we're in this zone, right? So I knew that this is our key zone. And now on the lower time frames, after marking out that zone, this is simply where I was looking for a market structure shift. So this is where originally we were consolidating, and it looked like, okay, we had tapped into the zone. We're probably going to shoot up now. But of course, the momentum quickly changed. And that's one thing that I really noticed. So this is something I would pay attention, especially if you guys feel like you're always trapped, right? You might have the price action in your key zone, especially if it's based off of the higher time frame, like it is in our case. However, you might get liquidity sweeps, especially if you have ascending highs or descending lows, or a perfect trend line, or equal highs or equal lows. And in this case, we have these 3 lows. So I knew that, okay, the price pushed below these lows, but we're still roughly around this zone. Let's see if there's a momentum shift, right? Is this going to be a liquidity sweep or not? Is it a liquidity grab? This is pretty much, I played this back a little too quickly, but basically when I saw the second bearish candle following this bullish one come in, and then this bullish one just came back and engulfed it essentially, that's where I was like, okay, this is my entry. Stop loss would be below that candle, and let's at least aim for like a 1 to 2 or a 1 to 3. And in my case, I believe I got my stop loss, or take profit, I should say, was roughly around here, right? Below this peak, knowing that, all right, we're approaching this. Let me change that now, right? I knew that, okay, we're approaching the next resistance zone right around 1.16550, give or take. So my take profit, I'm going to have it slightly below there. And so now if we play it back, it's just chopping around, but then eventually it shot up. And there we go. That was a pretty solid 1 to 3. And this is where using imbalances and the strategy of analyzing the market structure and anticipating liquidity grabs, especially based off of a higher time frame narrative that you form, can be pretty deadly as a combination for you guys out there who are intraday traders or even swing traders. And yeah, I appreciate you guys watching. Drop a like if that was helpful. And that's all for this one.